Good afternoon. Welcome back to the channel. Hope everyone is doing well, having a good weekend. Man, what a week. Last week we had a lot of news. We had a lot of big earnings, specifically from Apple, Meta, Microsoft, Amazon. Yeah, and they couldn't hang on to gains for now. Microsoft, nice gap up, couldn't hold. Now we're kind of pulling back. Apple, a little bit disappointing. It wasn't bad, but they're front running tariffs, and there's still no update on AI. So there's that. We also had a lot of economic data. One of the key things last week was definitely the jobs data because, as you may have heard, they revised down May's reading as well as June substantially, about what, 250K jobs overall. Not a good look, especially for the argument that the jobs are stable. With that reading, yeah, I mean, doesn't give that vibe at all. Rate cut odds have increased for September, so there's that. Not to mention, one of the Fed members, Kugler, has decided to resign and that her last day is going to be on August the 8th. We will get a new Fed member nominee from the Trump administration, probably aligned with his viewpoints of cutting rates sooner rather than later. Powell has been very adamant that the Fed must remain independent, and he refuses to cut rates and wants to be patient with everything because we haven't really seen tariffs creep in fully just yet. So there's a lot of good arguments to cut rates now. I understand that. There's also really good arguments to keep rates steady. So yeah, it's going to be a debate, and it's going to be an interesting study for the future, to be honest with you. So a lot to unpack and a lot to really dive in. But, we got a lot to focus on this week. So let's just dive into it. Let me switch cameras here so we can go to the full screen with the charts. All right, so first thing I want to kind of go over first is the economic calendar. It's going to be a lot more quiet than last week. We do got a few bond auctions this week. We have the ISM Services PMI, which is a leading indicator of economic health. It's been pretty around that 50 mark for the past few readings. Nothing too crazy though, so we want to see if that continues to hit the mark or if we do see some cooling effect on that. We also got a few Fed members speaking next week, so we'll get some more insight. We did have two Fed members dissent and wanted to cut rates now. That was Waller, and I can't remember the other one off the top of my head. Waller, and I'll have to double check. But we had two Fed members dissent and wanted to go ahead and cut rates. We don't get Waller this week, but we do got Daly speaking, so that'll give us something at least. And we got Bostic. Bostic is the Atlanta Fed leader there. But other than that, relatively quiet. Now, when it comes to earnings, we don't have any major market-moving players. We do got some interesting ones. Palantir, Helms, Oscar, AMD, Supermicro, Uber, Walt Disney, Dave, DraftKings. There's definitely some interesting names here to kind of be aware of. AMD probably the most notable of the semiconductors. That's the main one that I'm personally going to be paying attention to this week. We'll see how that affects the whole semiconductor realm. AMD's had a really nice run up these past few weeks. So yeah, we just kind of need to keep on our toes, so to speak. Now, as far as the grid goes, and I'm going to go ahead and show you, I haven't really pulled this up for the YouTubes, but you get this in my channel pretty much on a weekly basis, sometimes more than once a week. Now, as you can see, yeah, let me move me real quick. So there we go. As you can see here on the board, things have changed. And if you're new to this board, you can see that there's more red in there than there is green at the moment. So what does that really tell us? Well, first of all, we can say that there has been a slight shift to a more risk-off situation. We've lost a little bit of structure, and we've definitely lost some momentum out there on the main indices. There are some daily trends that are still intact. As you can see on the SPY, there is a bull reading on the daily, but those intraday readings across the board and pretty much broadly speaking, there's been a little bit of a breakdown outside of the XLU. So that's something that we need to pay attention to. Defensive names like the XLU, the TLT, they remain pretty much aligned to the bull side. Now we need to watch for short-term bounces to possibly fade here. If you are looking to go long or add into positions, my suggestion is don't be a hero. Wait for things to turn around, let that momentum shift occur. Now, there isn't a whole lot of news for the bulls here, so we could anticipate, that bears for now have a little bit of a tighter grip, especially in the short term aspects of things. We can see that even market breadth has taken a hit. Names above their 50 simple moving average has moved below 50%. And names above their 200 simple moving average has moved to about 53%. This was in the 60s going into the beginning of last week. So definitely a big shift there, and the internal breadth has been weakened. But yeah, there's the grid. Take a screenshot if you need it, or it's in my channel also if you need it there. But yeah, let's go ahead and dive into these charts here, and we're going to start off with the main indices here, starting with the SPY. Dotted green line is your 21 EMA, yellow line is your 50 simple moving average, and this red line is your 200 simple moving average. As you can see, we have closed below the 21 EMA for the first time in a few months, since the beginning of the year, really. Not the end of the world. It just means that, we need to pay attention. We do have a little bit of support here around the 618 mark. Now, we could get this all-time high retest at about 613. We broke out of here back in late June, so we've had a nice little month-long, July was a pretty good month. Now, when it comes to August, though, seasonality speaking, August is a little bit of a weaker month. It tends to be a little bit flattish, and then once we get into September tends to be one of the weakest months out of the year, and this dates back to 1928, so we got a lot of data to kind of back this up. But that doesn't necessarily mean August is going to be terrible and whoa and crappy. September maybe, but there's always that possibility. Trading is an odds game here, and this just points out that August is generally a weaker month compared to what we've been seeing. So far, off to a rough start, especially with that jobs data and the FOMC last week. So we closed below the daily 21. We do have a little bit of support, like I said, down at 618. If we do want to come back and retest 613 and retest that prior all-time high breakout, watch for that retest of about 613. Same thing here for the NASDAQ, the QQQ. We can see that we did break down below the 21 EMA. We do have the all-time high retest again, back at about that 542 to 540 zone. We can see there's some nice confluence here as well with the 50 simple moving average. So if prices do want to come back in and retest, I definitely think that this level should hold, especially with the daily 50 as well as the prior all-time high breakout. So if we are going to bounce, this is the area that I do anticipate us to try to bounce off of. Now, when it comes to the Dow is already retesting its daily 50, but the issue here with the Dow is that it didn't really get a chance to break out into all-time highs. Now, certainly we can keep an eye on this in case things do turn back to the upside and, financials and industrials and the XLB start to catch a bid. But as it sits, the Dow's kind of leading the way alongside with the IWM. IWM had this nasty breakdown. 210, 209 zone needs to hold. If we start to lose 209, 210, that could be bad news. But as you can see here with the IWM, we've pretty much lost the 200 as well as the 50, as well as the 21. So the Russell looks pretty terrible, which, as you know from trading this year and as we've run up, the IWM has significantly lagged behind tech, and the SPY in general. As far as all the main sectors go, XLU continues to be impressive. As you can see, quite a different story here between, the XLU and the IWM, or even the SPY. You can see that the utility sector continues to move to the upside. I am long on Southern Company, which is part of the XLU. Had a little bit of a dip scare there on Thursday, but other than that, it is held the all-time high breakout of 94.50, and we're looking for some more upside potential as far as that goes. But XLU is definitely your main leader. Semiconductors, we got earnings from AMD and SMCI. You did get a little bit of an indecision candle here on Friday with this little bit of a high wave candle. Needs to close back above the 21 EMA, but for the most part, if we look back at this grid here, let's see, where is the SMH? It's more mixed than it is anything. AMD earnings can definitely change that. Let's go to NVIDIA. NVIDIA doesn't report until like September or late August. NVIDIA still looks fine. If we get this retest of the 21, it could be a nice little dip buy. Trend is still aligned here on NVIDIA. So NVIDIA still looks pretty good. Let's see here. We do have VIX did close back above 20. Definitely want to point that out. Volatility is creeping back up, especially, after Thursday and Friday. We got that jobs report, Kugler resigning, just a lot of mess out there. So volatility, a little bit of fear crept back in, especially if we look at the fear and greed index real quick. We finally got back down to neutral, which is incredible. We've been in greed and extreme greed for what seems to be months now. So this is finally getting a reset. So what we want to see here on VIX, especially if you're bullish, you want to see VIX definitely get back down below 20, ideally back below 17. 17 is, my key level there. But if we continue to see VIX continue to rise, get above 22 and then 25, that's definitely a little bit worrisome. And then, like I said, go back to your levels here on the SPY. You want to see those prior all-time highs hold, and continue to play strength. Hood continues to look well. It got earnings last week, pretty decent report, and continue to play leadership names, individual names. Just be mindful of the overall pressures that we are seeing. Lighter size, definitely, because of the lack of momentum and the lack of structure. The wind is not really blowing in our favor, especially on these shorter time frames. So you definitely just want to be mindful. Maybe have a shopping list starting up to, where do you want to dip buy a few names that you may have missed out, or you want to average up somewhere, and so forth. So there's so many different things you can do here, but I wouldn't say everything is broken by any means. We're just maybe taking a little bit of a breather. We can draw some fib levels here. The 382 isn't all the way down here till about 580. I don't think we come down to that just yet. by any means. We could probably draw some different fibs, especially from this gap up here, from that low here. Yeah, and that 615, that lines up pretty nicely. That could give us some more confluence of that daily 50 and that 618 level. So I'll probably leave this fib retracement up off of that 576 mark. Looks pretty good to me. But overall, like I said, smaller size, especially if you go long, but definitely wait for that wind to shift in your direction and continue to play your levels. Manage risk. That's our number one priority. But other than that, good job last week. I think we got our results up from the main trading. Let me pull this up. Yeah, let me save. And let's take a look real quick at the board. I do believe Booty had a pretty good session last month. Yeah, Lady had 80%, Booty 100%. I'm right at about 60. I didn't take too many trades. I was also on vacation for like 10 days last month, so that should probably go up next month. Let's see, Chris 3 for 3. Ace is going to be doing his options starting next week, I do believe, so that's great. Overall, yeah, I mean, we had a solid month throughout the Discord, so good job. Continue to post those. Show us your gains in the gains channel. We give away all sorts of goodies. So yeah, good job. All right, that's going to be it for me, guys. Y'all have a great... Oh, yeah, actually... One second. Few setups here that I'm watching. Johnson & Johnson needs to clear 170. Once we get over 170, there is a gap to fill to about 172, and then 176 would be my overall target. Walmart looks pretty good here. There is definitely some stiff resistance around that 100 mark, but it's setting up. We can see that it's starting to squeeze a little bit. It's holding above the key moving averages above 100. I'm liking Walmart a lot. And then LP Materials has held all-time highs at 59. 21 is starting to catch up. Could be looking for a new leg to the upside. But yeah, that's what I'm looking at for the week ahead. Y'all have a good rest of your weekend, and I will see you on the next one. Take care, guys.